Hello, everyone, and welcome back to another cryptocurrency market update. My name is Tony Marchiori, and thank you so much for watching this video. Now, it is currently Sunday evening, 8:33 p.m. exactly, and the weekly candle closure did close about an hour and a half ago. So we have some closure and confirmation on our thoughts from the weekly candle closing last week and beginning the new week, and I'm excited to bring you guys that analysis. This video is going to be an extension really off of the prior episode on Wednesday, and at the time we had some analysis. We were targeting some possible downside scenarios based off the higher time frames on the weekly and the daily time frame, and I was saying at that time to be patient with it still, because it is always safer and smarter to wait for confirmation, which is a candle closure, at least before you can really act or confirm that bias based off the analysis, because the weekly candle at the time was looking bearish, and we had a bearish beginning of the week. However, so many things could happen, and this easily could have been a fake out if we were to spike down to the downside like we did and start buying back up and closing below the 8,000 mark and into these higher levels. This definitely could have looked like a bull flag on the weekly and possibly signaling a continuation to our upside with the current trend that we are, the bullish trend that we are in. So that could have been the case. Now I am going to stick towards the initial bias, the previous bias in the prior video of I do believe that we can I think that we can see possible downside continuation into this week, but also into the rest of June possibly. I do think that we are in for a retracement from the absolute terror, the absolute run up, the monster run up that we have had in the last 2 months. So all of this is healthy. All of this should be expected. Obviously, nobody knows what's going to happen, but this is healthy given the extension in the run up that we have had. So, guys, without further ado, let's take a deeper dive now. I'm going to go back to the daily time frame here and zoom in, following up from Wednesday and our prior episode. So at the time we were here on the 5th, we had the closure after beginning the week with some downside pressure and some selling into the 7,000 level. So because of that, we were expecting a possible retracement after such a drop really from the get-go. You can see we sold off right at the beginning of the week and never looked back from there. So when we saw that selling, we were down here at the daily closure. We closed right on the 7,800 level, the 7,780 mark, and this was an inside candle. We easily could have seen continued selling from there. However, I just didn't think that they would drop it like that without some further consolidation uh, ahead. So from there, obviously you can see that we had this on the hammer candle that formed here. The following day we had a stop hunt just below the prior low, and we did break below the trend line for a brief moment in time. However, started to get the buying intraday and formed as a strong bullish hammer candle. From there, we did end up seeing the retracement to the $8,000 mark, the prior week low. We can get rid of that now. That is not the prior week now, but that was at the time, that was the prior weekly low, and we did see the retracement to there. I was possibly seeing the $8,200 mark, this gray region being hit. Like I said, I had a margin long running from this trend line, and I possibly did think that we could see the higher 8,000s reach. However, we got just shy of that, but you cannot complain. I certainly am not, because we saw the $8,000 mark retested, and that was good enough for me. From there, then we saw the reversal back to the downside. Zooming in on the 4-hour, we can get a closer look of really what happened. And it did look like a really nice double bottom. Like I said, we saw the lower low, but that was just a manipulative spike with the wick piercing below and hitting that $7,500 mark. We did see the the double bottom play out a little bit and come up to the $8,000 level. Now, rolling into the weekend here on Friday and Saturday, it did possibly look like this could go either way, whether we were going to see a continuation into this upper 8,000 level, like I mentioned. However, as you can see, we just rejected it one too many times and started melting to the downside. Just not too many buyers coming in and continuing this up. And so really the warning shot that you had was this gravestone doji on the 4-hour, piercing above here and retracing fully back to it. So that was when I did exit my long position, and I said, I'd rather be safe than sorry. I was in pretty good profits at the time, and I certainly was not complaining about what I had, even if it was going to continue higher. So from there, we are back in a similar situation. We are holding the trend line currently, as you can see, spikes down in this $7,500 region. Again, you have one spike, two spike. Now we have the third revisit down here, and it does look like we are setting up for another retracement higher here, and I really do think that is the case. Like I said, I do hold a bearish bias now from the weekly candle closure. However, I don't think necessarily that we have to go right ahead with that. I think that they will consolidate this from here a little bit further, and possibly I think a retracement up to the $8,000 mark would be really healthy to retest this resistance once again and pick up some liquidity for the sellers to bring this back down another leg. Now, obviously, if we do have a body closure here on the daily below this trend line, or on the 4-hour below this trend line, that'll give me some caution of, I think that we could easily see the continuation down lower before, and we certainly do not have to see a retracement first. We could take this up to 7,800 and reject from there, making a lower high, and then see the breakdown. But my belief is that we can easily see, and we probably most likely will see, a revisit of 8,000 and possibly a stop hunt up to that $8,200 mark before we see the breakdown. Now, this is the level that we held from last week. This was really the final line in the sand, I guess, if you will, of what I wanted to see hold. The 74.50 mark, I wanted to see this hold for a couple of reasons. Like I said, on the weekly, this was a key level, revisited once and twice on the second time there. So a strong level, and especially whenever we had that spike, like I said, on Thursday, it tested it for the third time. So I do believe, guys, you can really use this 4-hour candle now as your major level to decide. If we see a daily closure below this, then I think that would signal the continuation lower. Where will we pull back to? That is definitely the question. That is what we're all wondering, if it's going to occur. And like I said, I believe it will. So if that's the case, as you can see here on the weekly, we have this first zone. We can hurry up and change that a different color now as possible support. Now, if we do see this blue region tested, the $6,000 level from about 6,200 to 5,700, maybe even possibly higher, we can pull this up a little bit to about 7,400. Just if you want to give yourself some extra cushion there on where we could come down to, it could easily be the top of this weekly candle into 7,400. Just to be conservative. Now, this was prior support last year, and all through August, this was the base. This was the unbreakable level. I remember everyone was saying that there's no way this was going to give way. This is the bottom. But obviously, like what I mean by this is that was a very strong level before, and so that's kind of why I have that belief that I think this will be a strong zone once again. Obviously, we can see a deeper retracement, but I will cover that and we will address that when the time comes. But for now, that is the lower region I think can most likely be hit, especially if we're pulling in our Fibonacci tool. We can take the wick high from there to about the low through here. And obviously, we can easily see The 618 lines up with the $7,400 mark, and the 100% extension lines up with just about $5,800. So really, a good region that we can target for shorts, or most likely if you're a long-term investor in this market, that's a really safe place to look for some longs at and add dollar cost average your holdings into that level. And I think that's a very smart move. Obviously, because I'm saying this, so I'm going to do the same when the time comes. I'm going to monitor how that zone interacts, and I'm going to look for, like I said, whether it's margin long positions or just accumulating, not necessarily for Bitcoin here, but some others that will move and pair with the overall market. So pretty short video, guys. It's just straight to the point. Not much has changed, like I said, from our last video on Wednesday. So I just wanted to make this for an update in my thoughts from when we last left off. So I hope you enjoyed this video. If you did, please like and subscribe to this channel. I'm going to be trying to post more of these analysis and possibly other content in the future. So please support this channel. Thank you so much, guys, and I hope you all have a great week ahead.